Hey everyone, Nick Shaheen here looking at Jumia update. A while back, issued a long uh, debit call spread or debit calls, whichever one people wanted, a bullish trade on it, and it worked out very well. The trade is up if somebody bought just a double debit call spread, which is very easy to do. They're up 50%. So it's a nice bookable profit. But the thesis, I need to update the chart because somebody asked me about it just now in the chat room. And by the way, if you're not in the chat room, the link to it is down below in the description of the video. It's not free to be in there because we do good work like this. And it is free to try it out. So the link will take you to PayPal, but it's $0 for 10 days because I need to validate that it's a real person, not a troll going in to badger our 280 people, which is what we have. So the trade was on March 25th, and it was a debit call spread. It was 2.4 cost. I think now it's 3.7 or 3.6. So pretty healthy profit. Bookable, depends on the portfolio. Time to update this chart. So the lines were, back then, to say one thing, and that thing is still happening. That's why I don't want to overstay my welcome. So this line right here, let's start with this one. What's the deal with this funny looking thing? The point was to not draw an inverse head and shoulders. I mean, an inverse cup and handle or a head and shoulders. So we have a neckline developing, whatever you want to call it. It's a neckline, a battle over an area of contention. They keep bouncing off of it. But if they're doing it from lower highs, it's not good news. Eventually, if they break through it, they're going to go whoosh lower. And that's what this line denotes. This, at the time, I said, yes, nice bounce, but you don't want to see it bounce, come back, draw the line, and lose it. And, the price action kind of evolved that way. So now if I wanted to do it now, I'd say, I don't want to do this. So what you don't want to do is that, because then you draw some sort of a downside scenario like this. I'm not forecasting this. I just told you I'm long, so stop speculating. So the idea is you don't want to use a point of contention. So this, we just fixed it. Now it looks more, it would make sense to a technical person. So these are just my visualization of what could happen on a scenario. This says the same thing, simpler. You know what? Let's just get this out of there. It's going to confuse people. I know it. There, cleaner cut. I know there's a contention line here. You lose it, you're going for a ride. And I stopped here. We'll see where we stop. By the dip zone, so we would probably have support here, and that's why I stopped here. But we'll check that out. Meanwhile, the breakout pattern was this, and they already delivered it. So if I go, let's go to a daily and see what it looks like. And reset it. There we go. Now we're talking. So we first caught it here. I remember, somewhere around here. It more than delivered. And then it delivered this beautiful upside, and it came back and tested it. So this is where you can actually see some sort of a nefarious head and shoulders thing forming. You can see the neckline. You do not want to lose this neckline. Technically, it forebode prices down here. What did he frickin' say? I just told you I'm long. So my thesis is that this is improbable. Therefore, whatever is above is more likely. The market's just set new all-time highs. So why is this one not up there? Well, it's a new stock. It's an expensive stock. It does have an income statement, but maybe the exuberance was just too much. Was this the same time as the GME debacle was happening? So how about we cut this off and say this didn't happen? So it ran up to here, and now it's consolidating. That's what I want to see. So now I would be looking to resistance into 44. In fact, into 41 through 44. If I wanted to pick a candle that means something to me, it's this one right there. It just popped into my view. 42.20. Look, twice, and just above this failure and this contention zone right here. So I like this candle. So if I were to put one line of importance, that's where sellers are going to show up. So if it rallies into that, I definitely book my longs, and I'll rebuy it, get long again on a dip or on a rip. If they take it out and they meander their way back, that's great. So what I want to see is a rush. Take your time, consolidate, cogitate over it, build a good base. Look, they're building a lot of action from the volume profile. Then spring up from it. But when you do this, you spend a couple of hours there and then you come back down, it just becomes a problem that you have to deal with later. So this is better. You run, you consolidate for a long period of time, and then you run again just as much as you ran the first time, instead of run and pop and go to the moon and give it all back up. But hey, it is what it is. It happened. The point is, have a plan. And if you don't have a plan, join a group who has a plan. We have 280 people plus, and we're constantly looking for new good people. Styles of trading in the chat room vary. We have futures traders, we have perma bears, we have perma bulls, we have no jerks allowed. We sometimes don't have the same opinion, but we debate like grown-ups. Every once in a while you get somebody that has a falling out and leaves, but that's fine too. So get help if you don't have help. If you don't believe in charts, I don't know what to tell you, because boy, here's another idea about charts. Okay, so last week, I think it was Monday, maybe last Friday or Monday, we saw something in the charts that told us that there's a target on the SPY at 403.90. And we took longs based on that. I said, look at what I see. I'm taking this SPX long. That was a home run trade. It was at 40.30. And where are we now? Well above that. So we saw something in the charts. Charts do mean a lot. Not because I'm smarter than you, or because I use charts and you don't, if you don't, but because that's what machines use, and that's what they tell us. Most of the actions, most of the buy and sell that you see out there are not people, but they're machines. Well, machines use nothing but charts to trade. So in essence, everything you look at in the chart is almost a self-fulfilling prophecy, or at least it gives you a target. So if I can tell that if I lose this, I can get to here. If I break through this, I can get to here. If I break out of this, I have a open air basically into this cluster of resistance. They do help a lot. A good fundamental thesis is essential, but for trading purposes and finding good entry and here, how about this? Avoiding obvious mistakes. The charts can absolutely help you avoid an potentially obvious mistake. In hindsight, it could be a definitely, oh my gosh, I can't believe I did this in hindsight. But in foresight, the charts could have told you, you know what, there's a chance that this might not work out. Odds are, it's mathematically something that you can calculate. All right, well, enough of that. Good luck trading Jumia. Fundamentals are fine.